Katie, we usually talk more macro, obviously, but unless something's changed in your outlook, it's episodic. So I expect people to be up to date on what you've been telling us. So we don't need to go into that. So I do want to talk tech and the reaction that we're seeing so far. I mean, obviously, Snap is one thing, but if you back that out and look at some of these major tech players, they're not going down, given the results and the forecast that they just posted. What does that tell you?
Well, right. So you're referring to Alphabet and Microsoft and their reactions being positive this morning. I think, if you look at their charts, they're really range bound. They're in consolidation phases, and this morning's bids do not take them out of those consolidation phases. It's certainly better than the alternative, and it always is important to watch support and resistance levels around earnings, but really none are being broken in either direction as of yet. And of course, all eyes are really rightfully on Apple. And Apple is pretty overbought coming into its earnings report. As a technician, we don't really have any visibility into what that earnings report will look like. But, the stock sets up in a way that it's kind of come into earnings pretty hot. And we, as of yesterday, with the decline being sort of 2 days in duration, we saw some deterioration in our short-term indicators. And I think your point on Meta with its gap down in response to the Snap earnings, I think that's an important thing to make a note of in this environment, because what we've seen is more of these oversold bounces like we saw in Meta and like we saw in Coinbase actually fail and give way to these gaps back below their 50-day moving averages. So it doesn't give us a whole lot of confidence in stocks that are clearing their 50-day moving averages, nor in the S&P 500, which was previously above and got back below yesterday.
Can we maybe broaden out the discussion a little? What's the 10-year look like now, considering it's Fed Day? And then you could explain gold and the dollar, both, to me, and give me an outlook for both.
Right. I think it's really a neutral situation for all of the above here in the near term or in the coming weeks. And we say that based on the proximity of levels for 10-year Treasury yields. There is some support, roughly 272, below that about 259. So there is some support not too far below current levels. And we've seen a significant loss of upside momentum within their long-term uptrend. But it's usually right to assume that that long-term uptrend will resume on the back of a consolidation phase, which really serves to sort of absorb overbought conditions that were long-term in nature. We're expecting somewhat of the same from the dollar, looking at the dollar index, a very decisive long-term uptrend, of course, there, some consolidation within that sort of framework, but we're seeing that as more of a pause to refresh the uptrend as opposed to the start of a big reversal. Gold is, really just been out of favor, as you know, negative momentum, and you really saw it from Newmont Mining this week, exacerbating the move in the gold miners on the downside. We think it's very overdone, and gold has support around $16.75 per ounce. So we are looking for at least kind of the bleeds to stop in that gold sort of arena, anything related to it. And yet I think it'll take some time for them to find their footing and really put up a good advance.